to matters financial and geopolitical from a frontier. Thank you kindly for stopping by. My home thoughts start with my hometown of Mombasa. And there's so many things I love about it. The sea breeze, which changes flavour just before the rains are set to come. But I sometimes feel, however, that the Mombasa I knew belonged to a different era. Let me put up a photograph of the sunset on the beach in Mombasa. Another one of Fort Jesus, where often you'd find young boys playing football just in front of the sea. A photograph of Fort Jesus that I took about a year and a half ago from English Point, looking back towards the island. And finally a photograph of Mombasa's government square, where we would occasionally venture with my mother to buy fresh fish from a shop called Samaki. Political reflections. Barack Obama says Libya was the worst mistake of his presidency, reflecting on his legacy in a Fox News interview aired on Sunday. Obama said his worst mistake was probably failing to plan for the day after. What I think was the right thing to do in intervening in Libya, Obama has conceded that the intervention didn't work. I like the fact that POTUS is big enough to accept his mistakes. And yes, Libya was a failure, and no one, absolutely no one, considered the day after. That's been a sort of endemic problem in all these interventions. Went back to a piece I wrote in October 2011, Gaddafi's body in a freezer, what's the message? And I was talking about Marshall McLuhan's prediction in the Gutenberg galaxy that the new electronic interdependence recreates the world in the image of a global village. And that has come to pass, the image of a bloodied Gaddafi, then of a dead Gaddafi, in a meat locker have flashed around the world via the mobile, YouTube and Twitter. And I asked, who's in charge of the messaging? Put up a photograph of Gaddafi meeting the president of Italy a little while ago. In response to a tweet from my friend Hervé, who's currently in Vietnam, referencing the Panama Papers, I said I still find the omission of any North American individual so far a conundrum. Panama's GDP grew by 6.2% in 2014, according to the World Bank. And then Al Jazeera had a great story about the indigenous people and how far away these Panama Papers was from their experience. Life is simpler here. It's too fast in the city, says Seltzer. Kerry's visit to Hiroshima nuclear site tests waters for Obama. It is a gut-wrenching display. It tugs at all of your sensibilities as a human being. It reminds everybody of the extraordinary complexity of choices in war and what war does to people, communities, to countries, to the world, Kerry said later in the day. Put up a photograph of the bomb blast just after it was dropped. US deploys B-52s for bombing in Syria and Iraq. The US Air Force sent B-52 bombers to the Persian Gulf Saturday. Plans to use them for bombing raids on targets in Iraq and Syria, according to the Pentagon and the US Central Command. An undisclosed number of bombers will be stationed at Al Udeid Air Base in Qatar. This marks the first deployment of B-52s in the Middle East since the 1991 Persian Gulf War. A US B-52 bomber in flight. This is a photo by the US Air Force. And then I found this. I reshot old photos to see how China has changed over 100 years. Have a look at that link. I was listening to some words from JFK and came across this on YouTube, the speech that killed him. And listen, a couple of quotes for you from John F. Kennedy. We need men who can dream of things that never were, and those who foolishly sought power by riding the back of the tiger ended up inside. Matteo Renzi is visiting Iran. Let's move on to the markets. Germany's average government bond yield, known as Umlaufrendite, has dropped to zero for the first time ever, according to Holger. Have a look at his Twitter pic. Currency markets, and I haven't checked it for a few minutes. Euro 114.09, dollar index 94, Japanese yen 108.20, Swissy 0.9541, pound 142.45, bit of a bounce over the last few sessions. Aussie 0.7638, India rupee 66.445, South Korean won 11.4324, the Rial 349.14, Egyptian pound 8.87, and the Rand through my level where I sold it when I said it was my trade of the year. Well, one of them. It's at 1471.60. I'll put up a 3-month chart of the dollar index. 93 remains the key level, as I've said separately. Euro dollar, I'll put up a 3-month chart of that as well. 114.50 is the key level in terms of the euro dollar. Gold back above its pivot last time I checked, 12.55, looking stronger again. Crude oil above $40 in New York, but I think it'll crumble back to 30 again. The World Bank put out their Africa Pulse, global economic update. Low commodity prices continue to impede growth. This is for Africa. Economic activity in sub-Saharan Africa slowed in 2015, with GDP averaging 3%, down from 4.5% the previous year. This means that the pace of expansion decelerated to the lows last seen in 2009. 2016 growth forecast subdued at 3.3%, way below the robust 6.8% growth seen in GDP during the 2003-2008 period. There were some bright spots where growth continued to be robust, such as Côte d'Ivoire, which saw a favorable policy environment and rising investment, as well as oil importers such as Kenya, Rwanda, and Tanzania. As countries adjust to a more challenging global environment, stronger efforts to increase domestic resource mobilization will be needed. With the trend of falling commodity prices, particularly oil and gas, it is time to accelerate all reforms that will unleash the growth potential of Africa and provide affordable electricity for the African people. That's Matteo, World Bank Vice President for Africa. Several countries expected to see moderate growth. Growth expected to edge up in Ghana, driven by improving investor sentiment. Kenya growth expected to remain robust. Housing and transport are particularly costly in urban Africa. Housing prices are about 55% higher in urban areas of African countries relative to their income levels. Urban transport includes prices of vehicles and transport services is about 42% more expensive in African cities than cities in other countries. Households and workers' firms also face high urban costs. Cross-country analysis confirms that manufacturing firms in African cities pay higher wages in nominal terms than urban firms in other countries at comparable development levels. The report in full is also linked on the website, saying risks to the outlook remain tilted to the downside, including a sharper than expected slowdown in China, further decline in commodity prices, delays in implementing the necessary adjustment to the export price, shock in affected countries, that's a definite, worsening drought conditions and political and security uncertainties. 3.3% in growth is expected to be at 3.3% in 2016. Considerable variation in economic performance across countries, with the slowdown concentrated among the region's largest commodity exporters. Growing economic vulnerabilities and weakened policy buffers continue to pose challenges for policy. Average growth in oil exporting countries is estimated to have slowed from 5.4% in 2014 to 2.9% in 2015. Activity weakened significantly in non-energy mineral exporting countries, including Botswana, Guinea, Liberia, Sierra Leone, South Africa, and Zambia. In comparison, the slowdown has been less pronounced in most oil importing countries. Mozambique delayed investment in liquefied natural gas sector, weighed on GDP. In Uganda, large depreciation of the currency spurred tightening of monetary conditions. But saying, nevertheless, compared with the sub-Saharan African average, growth has remained robust in these countries, helped in part by lower oil prices. Ethiopia, Rwanda posting solid growth, Tanzania as well. Public debt rose marginally in Nigeria. However, some oil exporters, Angola, Gabon, Republic of Congo, saw a large increase in their public debt to GDP ratio, exceeding 15 points in the case of Angola. Essentially bullish more about East Africa, which is the point I was making on this 8th of February when I said Kenya and East Africa on the up as the rest of sub-Saharan Africa slumps. I have issues with the World Bank's forecast because I think South Africa will be at 0. I think Nigeria will be at 0% this year. And that's what I was saying in February. I like this tweet, MSF UK, I'm beyond the front line. This is in Bentiu, South Sudan. Then I saw this tweet from Pascal Grotenhuis, who's the Dutch ambassador to Maputo. Current financial losses by floods in Beira, 20 million. Expected losses for Beira, 185 million euros in 2030. South African all share up 1.45%. Dollar rand 14.7160, back at the level where I shorted it. Egypt's president under fire over Red Sea Islands transfer to Saudi Arabia. Abdel Fattah al-Sisi has been criticized at home and abroad for agreeing to transfer 2 Red Sea Islands to Saudi Arabia that had been controlled directly from Cairo for more than 60 years. Egyptian stock market up 4.8% so far this year. Nigeria grapples with abrupt end to rapid growth, Wall Street Journal. World Bank said Nigeria's economic growth slid to 2.8% in 2015 from 6.3% the year before. IMF says this year's growth will slip to 2.3%, slower than the population, which adds 13,000 people daily. Factories closing because they can't find dollars to import parts. Supermarkets struggling to keep shelves stocked. Back home, Africa's top oil producers unable to import enough gasoline. Drivers in the city of 21 million have spent days inching through miles-long lines to fill their tanks. The fuel pump still operating. We are hungry and angry, said Victor Eten, a taxi driver who slept in his cab for 3 days to buy gas. No shower, no toothbrush. If this continues, there will be big trouble. Until recently, Nigeria and its economic capital were symbols of Africa's new consumer class. It will take a minimum of 18 months before we begin to see a recovery, said the presidential spokesman Femi Adesina. Through deft economic engineering, things will bounce back, but it's not going to be magic, it's not going to be overnight. On the streets, daily frustrations are mounting. Electricity is so scarce that the country's national power plants didn't produce a single watt for several days last week. The structural worry I see is the middle class, said Keith Richards, a Guinness executive who has worked in Nigeria for 4 decades. We could see an exodus of the future of this country. People are already leaving. Aggravating the oil shock is a mounting foreign currency crisis. In a bid to defend the naira, Nigeria's central bank has sharply restricted the availability of dollars. A weekly committee stipulates which banks are allowed to sell dollars and to whom, for what purchases and at what price. Result, businesses are increasingly unable to get the foreign exchange they need. They've got to get started, said Bismarck Rawane. People are getting impatient. This means there has to be action. There's some tension growing. Then Franson said everybody is just waiting for the light at the end of the tunnel. The Economist is saying that Nigeria's president is offering a masterclass on how to make a currency crisis worse. The mutterings of discontent are growing louder in Nigeria's street markets. I was talking about a tsunami in 2015 when I said, in January 2015, when I said Emefiele's finger in the dike strategy is about to be overwhelmed by a tsunami. That tsunami about which I was talking is still there, but it is getting bigger and bigger. February 8th, I said I find it extraordinary. Just such a brilliant President, Muammar Buhari, would risk it all on a bet on a single number in a game of roulette. Those are the odds. The curve of history from Soros skinning the Bank of England in 1992 to the Mexican peso crisis in 1994 to the Thai baht crisis in 1998 and many more, too numerous to mention, confirm that maintaining an artificial foreign exchange rate is a fool's errand and eventually carries the risk that the breakdown spirals out of control and can become seriously disorderly. The official Naira rate is just below 200 to the dollar, I wrote, but no one is holding any store by that price. That's why absolutely no one is putting any more money in Nigeria, because they all know when the haircut is finally imposed, it's going to be a big one. Put up a photograph of President Buhari. Nigerian stocks were down sharply after MSCI says it could remove Nigeria from the frontier index. The MSCI news has just complicated the already low confidence in the markets of Pembina and Kerry. The index of Nigeria's relatively liquid banking stocks shed 3.75% on Monday. Nigerian all-share down 13.94% year-to-date, down 2.68% yesterday. Ghana Stock Exchange Composite Index down 4.46% year-to-date. Taiwan is accusing China of kidnapping 8 of its nationals from Kenya. Kenya's Attorney General said in January it was considering a request from Beijing to extradite 76 Chinese charged with cybercrime in Kenya for trial in their homeland, but Taiwan said some of these people were actually from Taiwan, and a total of 23 of its people had been acquitted last Tuesday by a Kenyan court, given 21 days to leave. Yet China pressured Kenyan police to put 8 of the Taiwanese nationals to a Chinese jet bound for China on Friday. Taiwan's foreign ministry said it did not say how they were taken. This is an uncivilized act of illegal kidnapping and a serious violation of basic human rights, the ministry said in a statement. Kenya moves to restore confidence in the banking sector. Please have a look at my video yesterday. This was an interview I did with Bonnie Tunya of CNBC. If you didn't get a chance to read what I wrote over the weekend, that is uploaded on Rich Wrap-Ups as well, talking about Chase Bank, the size of the insider loans, the fact that it's the 3rd bank to be placed in receivership, a 4th national bank is not in receivership, as the Tier 3 banks are finding themselves at the bleeding edge of this move to a more rules-based system. Years of resisting increased capital requirements has meant that these Tier 3 banks are pirouetting their businesses on wafer-thin capital. Recent events to Dubai Bank, Imperial Bank, National Bank and Chase Bank now means investors and depositors are placing considerably less credence on the accounts as presented. Double whammy, depositors are embarked on a deposit flight to quality, further undercutting them. Without shareholders now stumping up bucket loads of capital, these banks are in effect now zombie banks. So the process of consolidation is now market-led. I appreciate the authorities are keen to keep this orderly and not allow it to turn disorderly. The important point for the authorities is not to provide a blanket put option and to erect a firewall in the right place. I wrote that before the presser that the central bank governor held on Sunday evening. I was also talking about social media not being responsible for these banks being placed into receivership. When you filter out the noise, social media has proven a preeminent signal and early warning system. In fact, I would argue that recent events confirm the need for real-time surveillance. I recall many years ago that totemic Hans-Jörg Rudloff, who was then chairman of Credit Suisse First Boston, telling me CFSB does not take credit losses, meaning you get caught on the wrong side of a Chase Bank type event and you're fired. I would have thought that recent events make a prima facie case for real-time surveillance both at the level of the regulator and at the level of various credit committees. The cutting edge of the financial markets has already moved in this direction. Smart money flew the day after Imperial Bank, I'm afraid to say. Kenya has 42 banks per 1 million. This is suboptimal. The more optimal outcome is fewer but bigger banks. It is clear now that market forces have the bit between their teeth and that we're now embarked on a market-led consolidation process. Across the economy, we're witnessing a flight to quality. The stock market is placing a premium on companies that feel are properly governed, EABL, Saharan, KCB and so forth, where they know they will not be caught out by an announcement that overnight the entire capital and more has been lent out to insiders. The market is now placing an enormous discount on those companies where they feel governance is challenged. The trend is a lot further to run. Detectives are questioning Deloitte and CBK officials on this bank fraud as well. Have a look at that piece I wrote on the 4th of April 2016 when I spoke about the bifurcation at the Nairobi Security Exchange. The shilling has hit an 8-month high, 101.09. Have a look at that piece I wrote about the Teflon shilling and other matters. Nairobi all share fell 0.57%. It's now down 0.02% year to date. CMA is punishing NBK for breach of profit alert rules. National Bank, in fact, bounced 5% yesterday, narrowing its year-to-date loss to 21.93%. The NSE 20 is down 2.03% year-to-date. Just going over some of the recent events, the central bank held a press conference on Sunday evening where the Governor, Patrick Njoroge, announced consequently from tomorrow, Monday, April 11, we will avail a facility to any commercial or microfinance bank that comes under liquidity pressures arising from no fault of its own. We will avail this facility for as long as it is necessary to return stability and confidence to the Kenyan financial sector. The proviso from no fault of its own is an important one. On Friday, Mr. Njoroge called on banks to consider merging or taking on strategic investors. He warned that some institutions might feel some heat from his tightening regulatory regime. Governor has taken a much tougher approach to banking supervision than his predecessors, issued a thinly veiled warning that banks should consider 2016 as a transitional year. This will inevitably require some consolidation. That means some banks need to look for strategic investors. Habil Olaka, who is the CEO of the Kenya Bankers Association, said the immediate pressure is starting to subside, but agreed that things are becoming much tougher. This is apparent. I said Mr. Njoroge and Mr. Rotich were trying to make consolidation an orderly process, that in my opinion we have now embarked on that process of consolidation in the banking sector. What we can predict is that we're headed to a place with less than 42 banks. Central Bank offered banks 10 billion shillings, $99 million in 28-day reverse repos, versus previously offering only 7 shilling at its 8-month high. Flight to quality has seen that KCB closed unchanged at 42, and it's surely going to be favoured by the current flight to quality. Standard Chartered, that's up and eye-popping 27.69% this year. National Bank we already know about. Another bit of action was Kenya Airways up 1.14% to close at 445. That's ahead of an investor briefing that CEO Buvi Gunze is giving this morning. Safaricom eased 0.3%. If you want to track the stock market in real time, just go to rich.co.ke. Just register, it's free. You just got to put in a few details so we can email you and things like that. Once you get the password, you can change that password or keep it. But then go to Rich Live, plug in your email and your password, and you can then track the market in real time, check what's happening in the banking sector and so forth. Once again, thank you for stopping by.